Hello everyone. Welcome back to our Chris Tech channel. Today we bring you one of the best and most interesting topics you have been wanting to know about. Fintech, which is financial technology. As we all know, this technology is one of the most helpful and assisting in financial status. Today, we will let you know deep down about it, its meaning, and how it works with all features. You want to know about it? All you need to do is to get a sit, like, and subscribe to this channel. Then let's delve in. What is financial technology, Fintech? Financial technology, better known as Fintech, is used to describe new technology that seeks to improve and automate the delivery and use of financial services. At its core, Fintech is utilized to help companies, business owners, and consumers better manage their financial operations, processes, and lives. It is composed of specialized software and algorithms that are used on computers and smartphones. Fintech, the word, is a shortened combination of financial technology. When Fintech emerged in the 21st century, the term was initially applied to the technology employed at the back-end systems of established financial institutions, such as banks. From 2018 or so to 2022, there was a shift to consumer-oriented services. Fintech now includes different sectors and industries such as education, retail banking, fundraising and non-profit, and investment management, to name a few. Fintech also includes the development and use of cryptocurrencies, such as Bitcoin. While that segment of Fintech may see the most headlines, the big money still lies in the traditional global banking industry and its multi-trillion-dollar market capitalization. Fintech's expanding horizons. In its most basic form, Fintech unbundles financial services into individual offerings that are often easier to use. The combination of streamlined offerings with technology allows Fintech companies to be more efficient and cut down on costs associated with each transaction. If one word can describe how many Fintech innovations have affected traditional trading, banking, financial advice, and products, it's disruption, a word you have likely heard in commonplace conversations or the media. Financial products and services that were once the realm of branches, salespeople, and desktops are now more commonly found on mobile devices. For example, the mobile-only stock trading app Robinhood charges no fees for trades, and peer-to-peer (P2P) lending sites like Prosper Marketplace, Lending Club, and On Deck promise to reduce rates by opening up competition for loans to broad market forces. Business loan providers such as Kabbage, Lendio, Axion, and Funding Circle, among others, offer startup and established businesses easy, fast platforms to secure working capital. Oscar, an online insurance startup, received $165 million in funding in March 2018. Such significant funding rounds are not unusual and occur globally for fintech startups. This shift to a digital-first mindset has pushed several traditional institutions to invest heavily in similar products. For example, investment bank Goldman Sachs launched the consumer lending platform Marcus in 2000 to enter the fintech space. That said, many tech-savvy industry watchers warn that keeping pace with fintech-inspired innovations requires more than just ramped-up tech spending. Rather, competing with lighter-on-their-feet startups requires a significant change in thinking, processes, decision-making, and even overall corporate structure. Fintech and new technologies. New technologies, such as machine learning, artificial intelligence, AI, predictive behavioral analytics, and data-driven marketing, will take the guesswork and habit out of financial decisions. Learning, apps will not only learn the habits of users but also engage users in learning games to make their automatic, unconscious spending and saving decisions better. Fintech is also a keen adapter of automated customer service technology, utilizing chatbots and AI interfaces to assist customers with basic tasks and keep down staffing costs. Fintech is also being leveraged to fight fraud by leveraging information about payment history to flag transactions that are outside the norm. Fintech Landscape. Since the mid-2010s, fintech has exploded, with startups receiving billions in venture funding, some of which have become unicorns, and incumbent financial firms either snatching up new ventures or building their fintech offerings. North America still produces most of the fintech startups, with Asia a relatively close second, followed by Europe. Some of the most active areas of fintech innovation include or revolve around the following areas, among others: cryptocurrency, Bitcoin, Ethereum, etc., digital tokens, e.g., non-fungible tokens, or NFTs, and digital cash. These often rely on blockchain technology, which is a distributed ledger technology, DLT, that maintains records on a network of computers but has no central ledger. Blockchain also allows for so-called smart contracts, which utilize code to automatically execute contracts between parties such as buyers and sellers. Open banking is a concept that proposes that all people should have access to bank data to build applications that create a connected network of financial institutions and third-party providers. An example is the all-in-one money management tool Mint. Insurtech seeks to use technology to simplify and streamline the insurance industry. RegTech seeks to help financial service firms meet industry compliance rules, especially those covering anti-money laundering and know your customer protocols that fight fraud. Robo-advisors, such as Betterment, utilize algorithms to automate investment advice to lower its cost and increase accessibility. This is one of the most common areas where fintech is known and used. Unbanked, underbanked services that seek to serve disadvantaged or low-income individuals who are ignored or underserved by traditional banks or mainstream financial services companies. These applications promote financial inclusion. Cybersecurity. Given the proliferation of cybercrime and the decentralized storage of data, cybersecurity and fintech are intertwined. iChatbots, which rose to popularity in 2022, are another example of fintech's rising presence in day-to-day usage. Fintech Users. There are 4 broad categories of users for fintech. Business to business, B2B, for banks. Clients of B2B banks. Business to consumer, B2C, for small businesses. How do fintech companies make money? Fintechs make money in different ways depending on their specialty. Banking fintechs, for example, may generate revenue from fees, loan interest, and selling financial products. Investment apps may charge brokerage fees, utilize payment for order flow, PFOF, or collect a percentage of assets under management, AUM. Do you want full details of how fintech makes money? We get you covered. Like this video, and don't forget to subscribe to this channel. Also, visit the next video for the full details of how a fintech company makes money. Thanks.